Okay, perfect. We'll get started. So thank you all for joining. Today's webinar will be covering banking and mortgage disruptors, and we'll be taking a look at performance of current big players, how these disruptors are doing, and then predictions for the future and for your business. Great. So to introduce myself, my name is Jamie Drayton. I'm Similarweb's lead financial services and e-commerce consultant. And what that means is that I talk to our new and existing customers about what our insights and what our data means for their business. So the insights that I'm walking through today, I've covered with a lot of our existing clients, talked about, okay, what does this mean? How are you responding to these trends? And I'm excited to share with all of you today. So in terms of agenda, we'll start out with an overall landscape of financial services and banking. I think it's very important to kind of level set in how is overall financial services doing first to get a sense of, okay, if banking's up 10%, is that a good thing, or is financial services blowing that out of the water? So we'll get a sense of where the whole landscape sits, where banking is within that. We'll then look at a couple disruptors and talk about their strategy for really managing to capture a lot of traffic and start to disrupt some big players in the space. Then we'll shift over to mortgage landscape. So talk about who are these big players, how much consumer interest is there. We'll cover disruptors in the space. And I think whether or not you're directly kind of focused on mortgages, there are some great examples of what these disruptors are doing to capture traffic that can be kind of ported over to whatever line of business you're focused on. So we'll spend some time there. And then finally, a summary of kind of what do these trends mean? And again, what does it mean for you? So starting with overall financial services industry, we see that like a lot of other sectors, consumer behavior is continuing to shift online, right? I think we think about that idea of consumer behavior shifting as typical for kind of retail, consumer, food, right? All of these areas where people are replacing their physical behavior with online. And I think that it's interesting to see how much of a trend we've seen for that, specifically in financial services as well. So when we think about 2019 versus 2020, the traffic increase is 25% higher across all major financial service companies. So that's a huge number, right? We see that uptick really happening kind of post-pandemic, so March and onward. And people just taking this behavior that they used to do in store and now doing more and more of it online. What's also interesting is how dramatic that increase has continued into the new year. So that gray box on the left-hand side, when we're looking at 2021 year over year, we see in January and February, we're already up 38% on last year. So as we're looking forward, how is this behavior going to stick? Do we think that consumers are here to stay online? I think that's definitely the case, and we're definitely on pace for the biggest year for financial services yet. Now, when we look at the device distribution, so how people are going to these sites and what these top sites are, we see that a lot of the big banks are immediately there. Chase, Wells Fargo, Bank of America, all falling in that top 10. PayPal is actually the largest, so a lot of online payment systems, right, operating through PayPal's site. And then we also see some more niche players, so like Credit Karma is on there. Robinhood, of course, everyone's seen the news in the past few months, but they actually had a lot of success over the course of 2020 and have hit the top 10 sites in financial services. For the breakup between desktop and mobile, activity tends to skew a little bit more towards desktop. So 60% of all traffic is on desktop, whereas 40% is mobile. And when we look at for the growth rate for both, we see that there's definitely acceleration on both sides, a little bit more on the mobile website. So 40% growth versus 36. And what that tells me is, of course, consumers are continuing to shift to mobile, but for most categories, we would expect a much bigger difference in terms of mobile web growth versus desktop. But because consumers were spending so much more time at home than usual during this past year, a lot of this financial services behavior stayed on desktop, and there's a lot of growth in that area. I'd say when we think about kind of the relationship between desktop and mobile web, these are good benchmarks of, okay, they're within 3-4% of each other. for when we compare this to the banking sector, for how does that compare in desktop and mobile web. So looking at the same view as before, but just for banking, credit, and lending, we see that banking sites are up 11% year over year, but this isn't as dramatic as what we saw in financial services. So 11% growth, about half the pace of overall financial services. So consumers are shifting online, but not as dramatically as these overall financial service buckets. And I think when we've been speaking to a lot of banks and different players in this space, there's a lot of, our 5-year digital plan has been compressed into 1 year. We know that people are shifting online fast. That's definitely the case, but it hasn't been as dramatic as one might expect when you have that benchmark of overall financial services. Again, though, when we compare the kind of 2020 performance and is this continuing into the new year, January and February up year over year, 16%, so definitely higher. February is not nearly as dramatic as January, so we'll see if this is really on pace for the biggest year yet, but definitely overall more digital behavior and people shifting online. And now that same look of what is the device distribution, who are these top sites? The top sites are no surprise. So we see Chase, Wells Fargo, Bank of America, they're all popping up there. But then on the desktop and mobile web side, there's a similar split. So 58% desktop versus it was 60% for FinServ. But what's really dramatic is how much more growth there is on the mobile web side than the desktop side. So mobile web growth, 28%. Consumers are visiting banking sites more on their phone than they're continuing to increase on their desktop. So despite this year that we've all spent at home, people are shifting this behavior for banking onto their phones, and desktop only increased 9%, still a significant portion. But as the years continue, I think we're going to see this number of the split between desktop and mobile become more and more equal as consumers continue that behavior on their phones. Great. So now that we've kind of level set of what's happening in financial services and banking, we'll talk about a couple major disruptors in the space. The first that I want to cover is Synchrony Bank. So I think whenever I bring up Synchrony, I get a lot of like nodding in the room of yes, we're definitely aware. But I think their strategy and what the consumer interest is behind their products speaks a lot to what people are looking for and why they've seen success. So just looking at their growth, when we're looking at that January, February, year over year, 78%. When we compare that to overall banking, it was 16%. So very dramatic growth that they've seen in the past year. And when we look at the top searches that are resulting in this traffic, so where is this traffic coming from? It's largely based around the strong credit card partnerships that Synchrony has. I think that it might be surprising to some to see such a kind of old brick and mortar names pop up on this list. But I think this really shows when we're seeing Old Navy credit card, TJ Maxx, Lowe's, Gap. These are all the stores that there still is a lot of consumer interest behind. And as consumers are feeling a little bit more confident in the direction of the economy, they are looking for these credit card signups and then going through Synchrony, of course, to log in or sign up for those credit cards. So traditional retail partners are still making a big difference, and interesting to see how much success Synchrony is seeing because of those credit card partnerships. The next example that I want to talk about is Chime. And I think Chime is really a best-in-class example when we're thinking about these neo or digital-only banks. They've seen a lot of growth in the past year, so much higher, 267%. And the way that Chime is capturing traffic, I think, is what makes them so best-in-class and a bit unique in the space. They're really focused on this featureization and the flywheel that creates. So that's a lot of buzzwords, but what that essentially means is that they're really focused on getting consumers in the door with features that traditional banks don't offer. So that's something like early access to paychecks, no-fee mobile banking. And then once a consumer has signed up for one of these accounts, they're seeing a huge amount of success in getting them to sign up for all of the other offers that Chime has. So get someone in the door, continue to offer features, and it's this flywheel of signing up a consumer into more and more of your product offerings. That piece alone, I think, speaks to their kind of best-in-class nature. But what's so interesting is the search strategy that they've used to not only just kind of lie down on that, okay, we have this featurization, this is how we're going to grow traffic, but taking this really aggressive approach of building out content to respond to consumer demands. So when we look at these top non-branded search terms to Chime, we see that it's a lot of other major banks searches around account or service fees or even closing accounts. So when someone is searching for Chase checking account fees or Bank of America checking fees, they're landing on a Chime page that's directly calling out this competitor by name, and they're speaking to why their offer is better than these other major banks. So thinking about how content can kind of be this extra fuel or kind of gas on the fire of something that's already working. Chime is a great example of that through targeting what consumers are interested in and differentiating themselves from what's becoming a crowded space, even for the online banking sector. Great. So now shifting over to mortgages, and I know this is a quick webinar, so we're cruising through a lot of stuff. And if there are questions, please pop them into the Q&A and we'll try to answer everything at the end. But what we'll cover now is the overall mortgage landscape. We'll go through the same process of a couple disruptors. And I think the strategy of these disruptors, as I said before, is very, very kind of portable to whatever area that you're focused on. It's a pretty unique strategy and somewhat ingenious, I think, of how some of these smaller guys are managing to capture traffic and divert attention from the major providers like a Quicken Loans or Chase or Wells Fargo mortgages. So starting with overall landscape, now we have that level set of what was happening in financial services. Growth was 25% year over year. Banking was 11%. We see that the mortgage industry is about 3 times the pace of financial services. So a big year. You can see when these bumps occur, and they're largely tied to when more news was coming out about low interest rates. So of course, consumer demand will go up as interest rates are lower. But I think what's so significant is how much this demand has continued to shift or continue to kind of track into the new year. So January and February, 116% year over year. The mortgage sector is definitely on pace for its biggest year yet online. And I think as this demand increases, we're going to see that more and more of this activity continues to shift digital. Now, thinking about who are the biggest providers in this space and are they growing their share of voice in the mortgage industry? We see that some of the biggest players, so Rocket Mortgage, Better, Loan Depot, they're continuing to increase their share of voice or overall market share. And what that means is that despite a very strong growth rate in the mortgage sector, these players are growing at an even faster rate. So whatever that consumer interest is, they're capitalizing on it to make sure that they're capturing even more traffic than the overall sector. And what we're looking at here are those players like Rocket Mortgage and Quicken Loans that primarily or entirely focus on mortgages, compared apples to apples to just the mortgage section of a bank site. So this is, we segment out the traffic of these sites. So we're just isolating Wells Fargo mortgages, Chase mortgages, Bank of America mortgages as an example. And what we see is that there's a kind of a difference in who focuses on organic content versus direct traffic across these players. But again, the players that are increasing at the fastest rate are the ones that are not traditional banks. They're much more focused just around this sector. So Loan Depot, they're lower down on the list, but had tremendous growth, 173%. Rocket Mortgage up almost 100%, so almost doubling, 92%. Really continuing to capture traffic across the mortgage sector. And I think that this is a very good benchmark when we're speaking to our partners on the mortgage side for what their performance looks like. So you'll see that the banks that we have listed here, they're all pretty close in terms of overall traffic that they're capturing. There's not too much deviation, not too much increase. But once you compare yourself to a Rocket Mortgage or Quicken Loans, you can really see what the opportunity is and how much is left on the table because of how much these sites are continuing to grow. And when we think about, okay, how are these different sites capturing traffic? How are the ads capturing traffic for interested consumers? We see that creatives are oftentimes responding to exactly what's happening in the market as needs shift. So this Quicken Loans example that you see, mortgage rates fall again, right? They're really quickly coming up with this content to get a display ad out that is very applicable to consumers. And the same on the Rocket Mortgage side. We know that there's so much focus around, of course, home and finding something within your budget, and that's what their display ads are responding to. I think the family piece and the budgeting piece. This, of course, is the largest purchase that almost all consumers make in their lifetime. And it makes sense that ads are quickly shifting to talk about lower rates, but also the family and budget piece of how can we help you and respond to the biggest things that you're thinking about before this massive purchase. So now shifting to the disruptor side, and I think, as I said before, the strategy that they're doing here is very applicable across financial services. I'll explain in a minute, but there are two main sites that I want to focus on that have started to disrupt the mortgage landscape. So the first example here is Own Up. And Own Up is really focused on this personalization aspect of the mortgage buying process. And I think it's no surprise that personalization is something that a startup or disruptor would be focusing on. We've seen it in consumables, we've seen it in cosmetics, and now it's just kind of stepping its way into financial services of how can we personalize a product that is very complicated, a huge purchasing decision. How can we make that more tailored to your needs and make you feel like you're in charge? So their process and their funnel of how they kind of get consumers signed up from the beginning. They start with building your profile. So they're collecting your information. So if someone drops off, they can follow up. A good way of just kind of getting someone in their funnel quickly. Their next step is connecting with a specific home advisor. And then this is that tailoring piece of finding the right loan for you. And what we've seen from that personalization aspect is that it's been very successful for them. So it's important to note that the base of these numbers, of course, is smaller than when we were comparing it to a major provider like Wells Fargo or Quicken Loans, but very impressive growth of 154% year over year, and definitely someone that we're going to continue to keep an eye on because they've managed to just capture so much interest from consumers, and their strategy for doing so is pretty unique. So when we think about this strategy, and this is the piece that I was saying is very applicable across whatever line of business you're focused on, Own Up isn't focused on those bottom of funnel keywords where everyone's competing for lowest mortgage rate, best mortgage for me, right? That's where we typically see traditional players in this space capturing traffic. And Own Up strategy throws that out of the window and goes for something completely different. So when we look at their top keywords, it's largely based around these super high funnel ideas of questions to ask when buying a house checklist, condo questionnaire, right? They're making sure that Own Up is associated with I'm making this decision of I want to purchase a home. So once someone goes through that entire cycle, Own Up has always been this resource that is helping them find information. And then they're the go-to for continuing to provide helpful information and be that personal advisor that's helping them through the home buying process. Now, another example, or sorry, just sticking on Own Up for 1 minute, what we see of this strategy is that it is working. So when we look at the top pages on their site, the keywords that are driving consumers there, like buying a house checklist, right? Questions to ask when buying a house. These are all growing in traffic, and they're some of the most visited pages on ownup.com. And on the bottom there, you'll see there are a couple of screenshots of what this content actually looks like. It's very similar to the way that affiliates create content. affiliates are content making machines. That's how they get a lot, all of their revenue, right? They're bringing people in through organic searches, and then they're sending them to a competitive mortgage or credit card, depending on where they play. OwnUp is taking that same approach of creating content around big consumer questions and then getting traffic in that way. So thinking of, can we take this approach for wherever our business is focused, target at a bit of a higher level? So we're saying, okay, if it's the credit card space, right? The parallel would be thinking about someone that's early in their financial journey. Can we answer the questions about what is APR and how to pay off credit card debt effectively? So when someone is making that decision of maybe a first credit card after school or expanding kind of their portfolio of different credit cards, you're responding to those demands, and then they associate your business with the helpful guide that will help them set up their own credit card or mortgage in this case. And another strong example of this is flyhomes.com. So Flyhomes is a bit different than OwnUp in that they focus on the entire home buying process. So one of the biggest features that they have, right? We were talking about features before with Chime Bank, the same for a lot of these startups and disruptors in the mortgage space. Flyhomes' major disruptor piece and feature is that they are able to put together a cash offer for when you're purchasing a home. So if you're competing with a couple other bidders to purchase a home, the fact that Flyhomes can assist you with the cash offer piece makes you a much more attractive buyer to someone potentially selling their home. What's interesting about their funnel is that they're so focused around helping you with the home finding and then buying process, and then mortgages is just kind of tucked in, but they're very involved in that piece as well. So we look at overall traffic. Again, they've seen huge growth. This aligns very well with the interest that we've seen in home buying, as there's been some kind of flight away from cities and people are more interested in purchasing a home. But what we see is that kind of as you're going through this process of buying a home with Flyhomes, the piece that's tied in at the end is that they help you directly with Flyhome mortgages. So it's actually a separate site, flyhomemortgage.com, and they're helping you with that process. But again, they're getting you in super early in the funnel in order to capture that traffic. And I think what's so notable there, right, is that it's the exact same strategy of how do we capture this traffic very early and then make sure that we're helping someone along the way. So by the time that they get to a mortgage offer, they know that they're working with us in order to secure that mortgage. Great. So thinking about now outside of the disruptors that we're currently seeing, what do we expect for the space moving forward? I love to bring up this example of Google and their ability to disrupt the travel space. And there's a good parallel here to what could happen in the credit card space, but especially the mortgage space, which is what I'll cover here. So in this example, Similarweb does a lot of work in the travel sector as well. What we see is that Google created this small window when you were searching for hotels in Miami, for example. And from this creation, it immediately disrupted how people started to shop for hotels. So on that right-hand side, you're seeing this split of where consumers were going, whether it was OTAs, right? Different like supplier sites like a Hilton.com or a Marriott.com. And what we see is that in the matter of a couple years, Google entering this space, that blue bar steadily increased, and now they're capturing about a quarter of overall traffic directly to Google or through Google. And what that means, that's a huge amount of traffic, right? If you're Expedia and you hear that number of the overall pie, now 25% of it goes to Google, whereas none of it went there before, that's a huge red flag of how is our business going to function and how are we going to continue to be a response to consumers when we know that we're losing out to Google and there's really nothing we can do when people are going through organic search, which is the largest way that people are landing on these sites. And I bring up this example because right now, when we look at mortgage calculator on Google, this is not the case yet, but it easily could be. So the mortgage calculator example, Google provides a calculator themselves where you can enter mortgage amount, the interest rate, time period that you're paying off, and they can come up with an estimated payment. A lot of affiliates have this same functionality as well as mortgage providers. But what it would take for Google to totally disrupt this would just be to have a link for signups to different mortgages. Overnight, Google could become an affiliate partner in this space, and thinking about, okay, how will the landscape change? What should I be aware of as I continue to think about my business in mortgages, credit cards, whatever, or retail banking, right? Whatever sector you're focused on, thinking about how quickly the affiliate landscape can change and keeping an eye on Google's position here, I think is very important for the future. So I know we're coming up against time, and I'll go through a quick summary of everything we talked about. Again, if you have questions after, feel free to reach out and we can share this content as well. But what we see is that overall financial service sites increased by 25%. Banks were a bit under that, growing 11%. Mortgage providers really outpaced the industry nearly 3 times with 71% growth. We see that Rocket Mortgage, Better, and Loan Depot really grew faster than the major competitors in the mortgage sector. So really strong players here and really competing with a lot of these major banks. In terms of how these banks are performing, Chase is really focused on direct traffic. So people understand Chase mortgages, they go directly to the site and that's how they're shopping for them. Whereas Bank of America also plays heavily in that content area and they're really capturing traffic through organic search. We also see that new entrants are increasing traffic through targeting consumers at the beginning of this funnel. And that I think is the biggest takeaway of whatever sector you work in, of thinking about, okay, instead of kind of going over these really high priced keywords and trying to get people at the bottom, how can we be part of that journey from the beginning and capture consumers earlier? And then finally, the performance of disruptors and Google's potential entrants are 2 things to really keep an eye on as you continue to monitor the space and think about what are the big changes to come, right? Depending on how much an own-up or a Flyhomes grows, can dramatically change what the mortgage landscape looks like in a couple of years. Great. So thank you all. I appreciate the time. I hope this half hour was helpful. And again, feel free to reach out with any questions.